On the S&P 500, this is a December 1075 put with that Italy about to pop. We already said that. SMF has been way ahead of all the commentators. We have the live coverages going back a few years. That's about all of what's happening right now worldwide and how people's perceptions and the buy and sell side tape is going to be. But we're going to be looking at this 1075 put because that's where we started that rally. That's where we sold it down from the summer, and that's where we started that rally. And it's been good. It's gone 200 handles. Yesterday, the S&P 500 on a daily chart, and I can show it to you right here, where we exactly hit. We're right here at that now on a daily. This is a daily, and that green line's a 200-day moving average. And we were going through it, but the only thing that lagged is that you had to have that buy side needed to be strong, just as when it sold through the 200-day moving average, going down in value and testing that red line, the 20-day. And you can see that the S&P rallies that we called for have gotten up here. Now, with Italy involved, it's all going to be about the sentiment. It is not a good picture. And we're not here to tell you that because we've been telling people that this was going to happen all along, and why the bulls, most of them sat out on the sideline and didn't get that. Now, when the S&P dips down, it's going to be how do people respond? Does the fever of fear enter back in the market? You can tell by looking in the fear indicator, the VIX.X. The VXN is a NASDAQ 100 fear indicator. Look at some of the bear ETFs, such as technology, bull and bear. Take a look at the SQQQ and the TQQQ, the bull. And the key ingredient is what will be the psychological impact between the buyer and the seller on this opening bell in 5 minutes from now. And clearly you can see this side of the trend. When we reversed, we've come back up. And what did we say? If we have a lower high, we didn't take that out, and we didn't have a big buy. We did not have a big buy bottom. So we're going to come back down to this area on that S&P. Is going to have to hold that 1233 on the lower end of the S&P. 1220, or then below there, you know, we start getting down there around that 1215 area, back across these ridges. This is where we had that major resistance level on the calendar yearly low of the S&P, and we did take it out right here. And ultimately on test number one, we bounced to this high here yesterday, but it's lower, and it's gapping down with bond yields and all kinds of things going on in Italy right now in their financial system. But we already knew it 2 years ago. This isn't new. We have talked about how these events can have these effects. All we care about is how that S&P lands at support, and does that bull make their engagement. What does that mean? Underperforming fund managers, rather institutional hedge fund managers, mutual fund managers, and investment types of people. If you've lagged the calendar year, it's going to show up that when they do pull back, that they come back in and buy again. This bottom here at this trend line on the S&P has to hold. If it breaks this trend line and closes below 1223.58, then that means that this first reversal will be validated before the fact, not after the fact. So once again, it will be between, and this is the S&P 500 daily index. Here we are on the 1075 put for December. We're going to have to take a look at the opening bell where they mark it up to. We'll have to wait for a period of time to try to get the low end. So I already know I'm going to put my bid out at $6.20. They're going to mark them up above that, but that's going to be my limit bid to buy one of these 1075 puts.